The tip I'll give you is I don't own a debit card. I've never owned one. I've never allowed my 3 sons.
Building business credit from scratch starts with understanding what business credit is and why it matters. Business credit is the ability of a business to borrow money, buy products, and secure services based on its creditworthiness, rather than relying on the personal credit of its owner. A strong business credit score can open doors to loans, better financing terms, and stronger relationships with suppliers. Unlike personal credit, business credit is tied to the business itself, not the business owner. This means your personal credit won't be affected when your business applies for credit. However, it also means that your business must prove its creditworthiness to lenders and suppliers. Understanding the key components, like payment history, debt level, and credit utilization, is essential. By tracking your business credit, you ensure you're on the right path to growing your company's financial standing. Establishing accounts. The second step in building business credit from scratch is establishing accounts that report to business credit bureaus. Without these accounts, you'll have no way to build a credit history for your business. These accounts help lenders and vendors see how well you manage your finances. Start by registering with the major business credit bureaus. The 3 main agencies that track business credit are Dun Bradstreet, Equifax Business, and Experian Business. Dun Bradstreet is particularly important as it assigns a DUNS number to your business, which is often required by large companies to extend credit. You can apply for a DUNS number for free on their website. Once registered, set up a business bank account if you haven't already. This is essential for keeping your personal finances separate from your business. This separation is important for building a strong business credit profile, as mixing personal and business finances can hinder your credit-building efforts. Now, focus on establishing trade lines with vendors or suppliers who report to the credit bureaus. These vendors can offer you net 30, net 60, or net 90 terms, meaning you can purchase goods or services on credit and pay within 30, 60, or 90 days. These payments are reported to the bureaus and will help establish your business credit history. Start with vendors who are willing to extend credit to businesses just starting out, as they may not have strict credit requirements. By establishing these accounts and using them responsibly, you can begin to build your business credit profile. Ensure that you pay your bills on time or even early, as timely payments are one of the most important factors in building strong business credit. Credit score basics. Once you've established accounts for your business, the next step is understanding and monitoring your business credit score. Just like personal credit, your business credit score plays a critical role in your ability to obtain financing, secure favorable terms with vendors, and attract potential investors. There are several different scoring models used by the major business credit bureaus, with the most commonly used being the FICO Small Business Scoring Service, SBSS, and Dun Bradstreet's PADEC score. Each bureau has its own way of calculating scores, but they generally take into account factors like payment history, credit utilization, length of credit history, and the types of credit accounts you have. Your business credit score typically ranges from 0 to 100, with higher scores indicating better creditworthiness. For example, a PADEC score of 80 or higher is generally considered excellent, meaning you pay your bills on time or early. A lower score may indicate a riskier borrower, which could make it harder to secure loans or favorable terms from vendors. To improve and maintain your credit score, focus on the following factors: timely payments. Payment history is one of the most significant factors in determining your credit score. Ensure that you make timely payments to all your vendors and credit lines. Credit utilization. Just like with personal credit, it's important to keep your credit utilization ratio low. Try to use less than 30% of your available credit at any time. Credit age. The longer your business has been in operation and using credit, the better your score will be. If you're just starting, this will take time, but it will improve as your business grows. Understanding your business credit score is vital for your company's financial health. Regularly check your score and monitor any changes, as this will help you take proactive steps to improve it. Building relationships. Building strong relationships with vendors, suppliers, and financial institutions is a crucial part of establishing solid business credit. These relationships help you access better credit terms, improve your credibility, and potentially secure more favorable financing options in the future. Start by working with vendors or suppliers who report to the major business credit bureaus. When you establish a positive relationship with these vendors, they can offer trade credit, such as net 30 or net 60 terms, which means you can buy now and pay later. These transactions, when paid on time, will be reported to the credit bureaus, building your business's credit history. Having open communication with your vendors is key. Maintain a positive, professional relationship and ensure you're clear about payment terms. Make it a priority to always pay your bills on time, as late payments can damage your business credit score and your relationships. Another vital relationship to cultivate is with a business banker. A business bank account is essential for separating your personal and business finances, and a good relationship with your bank can help you secure a line of credit or a loan when needed. Work on establishing a history of deposits and consistent financial management. This will make your business more attractive to lenders and help you when you need to request a loan or increase your credit limit. Finally, don't overlook the importance of networking. Build relationships with other small business owners, industry leaders, and financial advisors. Their insights can be invaluable, and you may discover additional opportunities to improve your credit profile or receive referrals for vendors who will report your transactions. Monitoring progress. The final step in building business credit is monitoring your progress regularly. Just like any financial goal, you need to stay on top of your credit to ensure that it's moving in the right direction and that you're aware of any issues before they become bigger problems. Start by checking your business credit report at least once a year from the major credit bureaus, including Dun Bradstreet, Experian, and Equifax. These reports provide valuable insight into your business's financial health and will show you how your credit history is developing. If any discrepancies or errors appear, dispute them promptly to prevent any damage to your credit score. Another important aspect of monitoring your credit is tracking your business credit score. Most bureaus will provide access to your score online, and some even offer credit monitoring services for a small fee. Monitoring your score will give you an idea of how your payments, credit utilization, and other factors are affecting your business's credit health. Be proactive about maintaining and improving your credit score. If your score is lower than you'd like, take steps to improve it by paying down credit card balances, ensuring timely payments, and avoiding unnecessary debt. If your score is high, continue managing your credit responsibly to maintain your standing. Lastly, set credit goals for your business. Just like any other financial goal, having a clear target will keep you focused and motivated. Whether it's improving your credit score by 20 points or expanding your credit lines, having a goal will help you stay on track. By regularly monitoring your credit and taking action when needed, you ensure that your business remains on the path to financial success, with the ability to take advantage of favorable financing opportunities when they arise. Now that you understand the basics of business credit, it's time to take the first step toward financial success. Don't forget to hit that subscribe button so you never miss out on tips that could change your business forever. What's the biggest challenge you've faced in building credit? Drop your thoughts in the comments below. And stay tuned for our next video, why most startups fail and how to avoid it, coming soon!